Okay, so when reading and listening to all of the trading experts, you hear the same advice from all. Stay out for now. Okay, that's a very common sentiment right now. The risk is not over. Pick the higher quality stocks, and the market didn't bottom yet. A simple question. If that's so, how is it that the market is up? Who's buying? Can't be retail traders. They are out listening to the quote unquote gurus. It's the gurus buying. That's the only conclusion here. They tell nice stories, but in the meantime, they buy the dip. One more time for me, never ever listen to anyone but yourself. Trade smartly, and then hello traders, and he's selling something. Here's the thing, never ever listen to anyone but yourself, and then he's basically saying, okay, now you should listen to me. So, like, right away, this is kind of a red flag post to me. It's why I wanted to share it. They're trying to, like, this is a message that captures the not very discerning buyer. So just be very, very careful with messages like this. But on to the actual content itself, right? Because I wanted to talk about that too. He has a point. Stay out for now, right? That's a common sentiment. The risk is not over. The market didn't bottom yet. So let's take a look at, take a journey back in time and look at what happened in 2008. From the high here, this is October of 2007, to the bottom here, the market crashed almost 20%. Okay, and then it recovered 13%. You can consider this to be, see how this box right here is about halfway up from halfway the size of this box here, this drop. That means it retraced, it bounced back, it recovered, whatever language you want to use, approximately 15%. You can't use the numbers. Remember, if you followed me for any period of time, you know that the percentages are deceiving. Negative percentages are way stronger than positive percentages. Don't look at the percentages, just look at the picture, right? Keep it simple, you know? So the size of this box is approximately half the size of this box, which means price bounced back 50% before it continued to drop down all the way down to here. And if you look at a figure from the high of 2007 to the low of 2009, that 18-month or so period, we saw a 57% drop. Imagine now that all you saw was this right here, right? This kind of looks like, this is 2008 as a reminder. This looks like, oh, look, the bottom was right here. And the market's going to recover. Look at that. We're almost halfway recovered. And then what actually happened was this. Okay? So when people, like, we're talking serious gurus, we're talking CMTs, which stands for Chartered Market Technician, people who get licensed to analyze graphs exactly like this. When they say stuff like, "Hey, we haven't necessarily hit the bottom yet," there's a not only a fundamental reason but also a technical reason that they are saying that. Okay, so I'm just going to reset and fast forward all the way to 2019. But if we look at this right now, it kind of looks like the same, right? We have a big drop. And it's like, oh my god, we've recovered just about halfway. If you want, I can spend some time to draw the actual box. Okay, so at its worst, we saw about a 35% drop, and then from there we've recovered. Again, look at the box, the size of the box, not the actual percentage, right? Because the percentage is completely misleading. A lot of people get that wrong. So this recovery bounce back is approximately halfway, half the size of the big drop down box, right? So we've recovered approximately 50%. Last time this happened in 2008, the market crashed like crazy, another whatever, and a total of 57% off of the high. So there's precedent for why people are saying, oh, the market hasn't bottomed out yet. If you were to rewind the clocks all the way back to 2008, you would have heard people say, like, oh my god, that was really bad, but we're starting to recover all the way back in. I'm not going to scroll all the way back because that's annoying. But you would have heard people say, are we bouncing back in about May of 2008? And of course, anyone who has lived through that period knows that we didn't start the real recovery until March of 2009, right? The market proceeded to drop a lot more, all throughout 2008 and well into the first quarter of 2009 before we saw any kind of a recovery. So is there room for the market to do something like this and have the S&P go all the way back down to maybe this yellow line that I had from a previous slideshow? Is there room for the market to do this? Absolutely, there is. We have precedent set for market behavior to do exactly that. Um, so it's for me, not to lean into this guy too much. He does have a point. Gurus that are able to time the market properly, they are buying and selling all the time. It has nothing to do with the actual condition of the market. They just know how to participate, whether it's a bull market, which means it's an uptrend, everything is going up, or whether it's a bear market, which means everything is going down. And it's like true gurus, and this is something that I don't claim to be. I am still learning to become a guru myself. But I've worked around and watched and worked for gurus for many years, and I got to watch their overall perspective. We had that slide this right. I got to watch their perspective and their wealth survive down years. When the market is down, they're still positive, right? And I watch their perspective. They don't lose their cool ever. They maintain composure. And it's easy to say, like, oh well, they have millions and billions of dollars. Of course, it's very easy. Like my own family is proof. They had millions of dollars. They panicked. They lost it. That's the I'm simplifying decades worth of family history there, but that's kind of it. Like they invested poorly. They lost. They panicked. They went on tilt, to use some poker terms, and their perspective was completely off. So my own history is proof that it doesn't matter if you have millions or even billions, right? If your perspective is off, then you are very, very susceptible to go broke because of like your wealth is going to get affected, your network is going to get affected, maybe even your physique will be affected. So the gurus are buying, but they're also selling, and the real gurus here, this guy does have a point, but it's an incomplete picture. The real gurus know that regardless of what kind of market condition we're in, there's plenty of opportunity, and it's just a little bit more slippery when the market is very choppy like it is right now. It's moving up a lot and it's moving down a lot on a daily basis. So there's plenty of opportunity, but it's also more dangerous opportunity. So, and I know I'm feeling that, right? I win some, lose some, and it's very, very, it's a very difficult ride, to be quite honest with you. But then again, I'm not a guru, so that's, but I just know common sense types of things. When I see stuff like this, I feel like that for the novice investor, or for someone that's just wanting to make simple moves and adjustments in their lives to grow their money, they're getting fed misinformation here, and that's part of why I do this kind of video on Thursdays, so to alleviate that as much as I can to whoever is watching.